Well, that
Right.
makes them eligible to write off expenses, whether they're paid on a W-2 or not. That's where I come in. This year, I've gotten almost $1 million in refunds for adjusters.
Wow. A rookie adjuster who we'll call Jake cleared $180,000 on Hurricane Laura. 6 months later, after he had splurged on a new F450, a center console fishing boat, and a Cancun getaway, he opened a love letter from the IRS demanding 72 grand that he no longer had. Jake assumed that fat deployment checks were pure profit. Every day, he spent money like a sailor in port. But he was skipping the boring stuff: mileage logs, receipts, quarterly estimated taxes. Because of that, he didn't have enough cash to pay the bill when the IRS envelope arrived. And because of that, penalties and interest snowballed, and his entire next storm season went to Uncle Sam instead of Jake. I'm Matt, a 25-year veteran adjuster, trainer, and founder of Adjuster TV, and today I'm joined by Kimberly Hardin. She's going to show you how to dodge Jake's nightmare and legally recover cash you thought was gone, starting now.
I've been doing taxes 33 years.
What would you say are the most common tax challenges that you see independent adjusters facing, and why are those kind of unique to our profession?
They tend to get behind on their taxes really quickly, and then they're afraid to do anything with their taxes. So they don't do anything with their taxes, and that's that's one of the things that I've found. Just about every adjuster that has come to me, there ended up all by referrals. I have about 40 adjuster clients. They all have something going on when they come to me. It's not just, hey, can you do my taxes for me? It's, hey, can you fix this $62,000 I'm behind, that I
Yeah.
haven't filed. So that's one of the
Oof.
biggest ones. And then the other one, they have a really specific situation. A lot of them are paid on a W-2, but they're actually classified as contract workers, and
Right.
and they struggle with this, and especially since 2019, when they implemented the Tax Cuts and Jobs Act, where they didn't let W-2, if you were paid on a W-2, you couldn't write off expenses, and that shot them in
Right.
the foot.
So you want to boost your career the smart way, right? Every year, top recruiters, team leads, and hiring managers gather at NACA, and you can sit down with them in person. This is where real careers get started. Scan the QR code or go to nacaadjusters.org right now and let them know that Adjuster TV sent
I
you.
researched the law, and the thing about the contractors was really iffy for a while, but they finally pinned it down a couple years ago, and they said, okay, this is what a contractor actually is. Every single time, if it does this, then they're that. Well, that
Right.
makes them eligible to write off expenses, whether they're paid on a W-2 or not. If they track their expenses and everything is normal, I do a return and I deduct them off, and I put plenty of prepare notes in so they can, see what's going on, what I'm doing to it, and why. And I provide all the justification. I have a whole tax position written to go with them that says all the laws, how they're contractors, how they are paid on W-2, and how they all relate, and it's all in a whole page long statement with all the
Nice.
actual laws that do that. And this year I've gotten almost $1 million in refunds for adjusters.
Wow. Out
Nine
of just 40 people.
999,347.
Ah, so close. So
I
close.
know, $600 away. I can
Oh,
believe it.
yeah.
I'm sure I'm hitting a million.
Tax planning probably kind of goes hand in hand with just financial planning in general, and not like, necessarily retirement stuff, but just like, your income and expenses for your household. So what are kind of some best practices in your experience for, maybe for anybody, but for adjusters in particular?
The biggest job is knowing what to ask the adjusters or whoever the client is, what they don't know to tell me, because
Yeah.
I get expenses a lot of times, a lot from adjusters, because they get really busy really fast. All of a sudden they have so much to do, and the little things get forgotten, and I know that. And I tell them, well, didn't you have this year? Didn't you have this year? And they said, well, yeah. And I said, well, you didn't put it in here, And they said, oh, let me go look at that. And and I said, you had this last year, but you didn't have it this year. Why is that? And
Right.
that is that those are the things that pay attention to.
What are some, in your experience, what are some overlooked deductions that IAs might miss if they don't work with a tax professional like you?
Some of the just standard deductions, and these are for everybody. For example, on sales tax, you're allowed to deduct any kind of tax except federal tax. and sales tax is one of them. It's usually a percentage of your income, unless you want to save all your receipts and add up all your sales tax. You can do that too. They also let you deduct the sales tax of like vehicles separately.
What are some tips for adjusters to better track their income and expenses throughout the year to simplify tax planning and prep?
Well, like I said, they could do it any way they want to for me. Whatever's easy for them. Some people want it on a spreadsheet. Some people put it in an app. Some people write it down after the fact and hope they guess it right. Um,
Yeah, that's interesting. So, a couple of things that I found, as an adjuster previously, I was an adjuster for 20 years, and now having my own business, is that probably the simplest thing. And you tell me if this is something that if one of your clients did this, if you would like it or not. But I had a separate account for all my claims work. So it was just, and there's just another checking account, and that's the the routing number and the account number that I gave for direct deposit for the ACH thing for all my firms. So all income came into that, and then I paid all my expenses out of that, right? And then I had and have a separate savings account just for tax, and just whatever money comes in, 20% of that goes into that tax account. Being a great adjuster isn't just about policy and software. You got to know the difference between hail damage and worn out shingles. Hague has the gold standard books and certifications to back you up in the field or at the desk. Scan the QR code or hit hagueeducation.com and use Adjuster TV for a discount and level up with Hague.
well, a lot of people do that, and that is a good plan because it also helps you separate your income. That's considered a business. Since you're a contractor, you're considered a business. It separates the business from your personal, because then when it comes time to justify it or have to talk to the IRS or show somebody or want to expand or do something cool and on top of it, then you have it separate, and it's a whole lot easier to say this is what I have. I have a lot of adjusters that use the exact same credit card for everything they do, and they send me a credit card statement every year, and they want me to go through.
Yeah.
And
Yep.
like I said,
Walmart, Conoco,
any
Taco Bell.
Starbucks.
Yeah, right.
And like I said, I don't care how they give it to me as long as they give it to me. But that LLC and S corp thing, the IRS doesn't actually recognize an LLC. It's a business structure. It's not a tax structure.
It's a state thing,
right? And that it doesn't give you a lot of protection, because as soon as you mesh it with your personal stuff, you lose the protection. And an S corp or an LLC is a sole proprietor, which you put on your 1040, your personal individual income tax return.
Yeah.
And then you've meshed them. So it depends on your lawyer on that one. A good lawyer, I read a lot of cases, and there's good lawyers that can blow that out of the water, because as soon as you mesh them, they're together.
Yeah.
And, there's other lawyers who will fight that to the death, and there's no way they're getting past it, because that's the way the IRS accepts it as reasonable and the way the business is done. But the S corp thing, that is way out of there, because you have to pay so much extra for the fees every year. You have to do all the filings. You have to have agents to accept the other stuff for you, and if you're not doing it on time, you've got thousands of dollars in penalties. Any adjuster, stay away from any of those arrangements, because you can write up your expenses without them. You just have to know how to do it, or be persistent, or find a good preparer that knows it.
An audit isn't like they're coming after you. It's like they look through your taxes and they're like, all right, this person's claiming 35,000 miles off of their taxes. We just want to see proof of it. Right. So that's all they asked for. And I was audited. And then I was audited again. And when I talked to the IRS person, she was like, usually up to 3. So if you get audited once, they might hit you again, or a third time. But I got audited twice. And it truly wasn't a big deal. And it's exactly like what you said. I was like, well, how do you want me to present this documentation of my mileage? And she's like, however you do it. I was like, so if I wrote it on a cocktail napkin? She's like, yep, just, take a picture of it and email it over. And I was like, okay. And I had a calendar with starting and ending mileage on it or whatever, but that was like, so I can't stress enough the importance of having a tax pro help you out. Like with my business, I have employees now and freelancers that work for me. We have marketing expenses, and we have I have a bookkeeper, and my bookkeeper and my CPA, they do all that stuff. So, and it would be a full-time job for me to try and do that all by myself just to save a few bucks here and there. So it's absolutely worth it, especially. And I've hired CPAs before, back when I was an adjuster, and who weren't familiar with how we work and the seasonal nature of the business. Where, like you said, you're making a year's worth of money in, 180 days, 6 months or whatever, and it can be very, very easy. And then you're making zero after that. So it's like it's really, really hard to manage that money. And a CPA that or a preparer that doesn't understand the things that we can deduct, the per diem that can be on some of our bills and whatever. You're setting yourself up for 2 or 3 days or maybe even a week of trying to poke through TurboTax. There's things that I say that are worthwhile expenses, and that's anything that can save you time is probably going to be worth spending some money on. So are you taking on more clients these days, or are you just going to hang out with 40, or what's your plan?
No. I every bit of my business is referral by word of mouth. That thing with the W-2s and not being able to write off expenses, that one's a big one, and it's not fair to adjusters. And
Right.
I had a client that I've actually had him a couple years now, and he got back $71,000 by reviewing his last 3 years and writing off his expenses. He was humping it, but he got back $71,000. And one of the checks, they come separately. Each year is done separate. One of the checks was $29,000. I actually had one for $89,000 too. So that was the biggest one. 71 was the second one. I've had probably a dozen of them that got in the 50s back, and I got a lot of them out of paying taxes also. I had one person that owed $45,000 for 1 year, and we adjusted it, and he owed $4 at the end of the year. $4.
Nice. So let's talk about this a little bit. So it's not, I mean, and I think this goes for tax preparers in general, right? But you can go back and do
3 years.
Go back a certain number of, so 3 years and just redo your taxes, right?
Right.
And that's the service that you provide?
Yes, I do it. I do the review for free. You don't pay anything to me unless you want me to file it to get your taxes lowered, or a bigger refund, or
Right.
and it's almost all from those expenses.
All right, if you're making real money as an adjuster, don't leave your career exposed. Errors and omissions and general liability insurance from Kaplik is designed just for you, and it might even be cheaper than what you're already paying. Snap this QR code right here or visit cplic.net/adjustertv to grab the free guide and lock in smarter protection today. I guess you got to pay your fair share or something.
Yeah, everybody's got to pay their fair share. But
Everybody
it doesn't have to be what the
one way or the
government says the fair share is.
Right. You might call them loopholes or whatever, but it's all legal. I mean, obviously you're gonna pay tax one way or the other.
I tell everybody, as far as deductions go, donate.
If you had a health insurance bill that the health insurance didn't cover, how does that work?
Medical bills are more than 7%, 7.5% of your income, then you can deduct them if you're itemizing. But
what about
go ahead.
Vehicles?
Donating vehicles?
Like donating, like cars for kids or...
Yep, I had somebody do that. They called me and said, I'm going to donate my Mustang I restored. What do I need to do? And I'm like, donate it to me. The vehicle thing, I've only had a few of those. One person donated their 3-year-old BMW.
Oh, wow. Well, I have a 2007 4Runner, and for people that watch my channel, have been watching for a long time, it's been featured in some of my videos. I bought it brand new in 2006, like at the end of the year, and literally drove the wheels off of it. I still have it. It's got almost 600,000 miles on it. I'm done with it. So I'm like, oh, I mean, I guess I could try and sell it or just donate it. And even if I didn't get a tax deduction on it, I'm still going to donate it. But I was just curious.
The tax deduction on cars comes out really good because, it'd be hard to max it out.
Yeah.
Well, you get plenty of deduction for the car. And if you're not going to get anything for it anyway, it comes out way better as a deduction. A lot of cars,
Sure.
it's in great shape to you, but the so having 600,000 miles on it, it's probably going to be a turnoff if you try to sell it like off your driveway or something like that. So
Yeah.
you wouldn't get anything for it. So the deduction would be worth a lot more. And on that kind of stuff, it for a lot of people, it just comes out to being a sentimental thing with autos. You know, I put my heart and soul into it. I'm going to donate it. I'm going to sell it, or that was my favorite car, or it's held up so long. I want somebody else to benefit from that. It's really kind of funny that something like cars comes up as an emotional
Yeah,
attachment.
yeah. Well, you spend as an adjuster, you spend all day long, all summer long in it. I mean, it's that's kind of becomes your little home, your little office.
You know, people, they forget about their laptop. They forget about the $800 iPhone they bought. You
Yeah.
have to have a printer or a mobile printer or a server. There's like a million lines of code in the tax, the Internal Revenue Code, and 10% of it is tax law. The rest of it, it's all exceptions. It's ways to get around it, and it's not illegal. You just have to know it's there.
And that's where you come in.
Yeah, if it doesn't come out the way I want it, I start researching and finding some other credit or deduction or.
Well, listen, Kimberly, I know you want some more clients. Like, how can people get in touch with you?
It's returnright.net.
Well, Kimberly, thank you so much for jumping on a call with me. This is super, super informative. I think this is going to be a really good one. So reclaiming those missed deductions can hand you a hefty refund. Nice. But here's the curveball. If you don't earmark that cash for licenses, gear, and certifications, you may still be benched when catastrophe season rolls around. Having the money is step one, but knowing exactly how much money you need to spend to get started is what keeps you in the game. It's such a pivotal question that I made an entire video breaking down the real startup costs for becoming an independent adjuster, and you can watch it right here. Thank you so much for watching, and have a great storm.